inflows. Let's welcome in our next guest. We have Mr. Sunil Subramaniam, CEO of Sundaram Mutual, joining us now. Thank you so much, Mr. Subramaniam, for being with us on NDTV Profit. Now, the most latest mutual fund data for the month of November has shown inflows to the tune of 36,000 crores. In fact, between April and November, now we've seen mutual fund schemes net in about 3 lakh crore rupees. What happened in November? Do you think this is something which was expected, what we've been seeing over the months? Or was it because of the demonetisation impact, large flows coming into the system? So, the financial assets got those inflows.
No, not really. I think the demonetisation impact is yet to be felt. The key thing about the mutual fund inflows this year has been the fact that something like 3,500 to 4,000 crores have been coming in through SIPs every month. And so that's what is kind of held up. And actually, if you see in a period when FIs were selling also, the markets did not correct as much as they should have, because mutual funds have been buyers in the market because of this steady flow of SIP money from investors. That's one thing. Second is, in the volatility, arbitrage flows are categorized as equities by the regulator. So arbitrage flows have been, coming out strongly or going out strongly depending on whether volatility is high or low. So those also contribute to the flow picture. So actually, those are the key. If you are able to take out the arbitrage picture, you'll get a better picture of the genuine flows. Because arbitrage money, as you know, is largely institutional money, which is betting on volatility, giving a good return.
What about the kind of fund flow we saw in income funds? We saw a fund flow of about 18,300 crores coming through. Was it a factor of what happened in the government GSEC rates?
No, not really. See, the money which is there in the fixed income side is mostly institutional money. So institutional money, it's more on the shorter end of the curve, because accrual yields are good at this point in time and they are sticking there. I think the longer end people are wary, because I think GSECs have already come down to 6.5, 6.4 levels. I don't think there's much scope for it to go way beyond that, given the fact that inflation is also rising because of the commodity cycle reviving again. So I think that the institutional flows, because there's no capex happening on the institutional side, so there's surplus liquidity with institutions which they are parking with the mutual funds.
All right, now let's talk about the demonetisation impact, which you said hasn't shown so far. Now, we had a previous guest who said that, this entire exercise has had an irreversible hit on the credibility of our markets to pull in flows, because we were this bright spot in this global economy which was looking uncertain. We had great growth, everything was firing for us, and then suddenly we've had a disruption through something which is completely unexpected. Do you think the credibility has taken a big hit?
No, I wouldn't say that. I think it's just that the flows which have gone back are essentially more global oriented. See, the demonetization has not affected India's healthiness as an economy. Okay, markets will react day in and day out. But if you look at it from an economy perspective, what has demonetization done? It's actually going to strengthen issues like GST, tax collections are going to go up. I think the consumption impact you're going to see over the next quarters is more of a short term. I would call it a postponement of consumption rather than a destruction of consumption. So I think that from a domestic focus, really fundamentally the India story has not changed. On the contrary, due to global developments, now sectors which are earlier down like metals and energy should also be reviving. So overall, I would say that we remain bullish on the India story, and I think this credibility loss or whatever, see, the point is that for an international agency, you've got to remember that they just don't know what is demonetization, because no Western country in recent history has ever experienced something like demonetization. So naturally, this was a very bold move by our government to do this. Nobody could have ever anticipated the impact, and obviously the cash economy is a significant driver, especially in rural India, of our consumption story. So to that extent that it gets corrected, I would say abroad there is an uncertainty on the impact of demonetization. So I wouldn't go so far as to call it a credibility loss as much as saying that we don't know what the impact really is going to be of demonetization, because they're not used to this kind of a cash. You see, in the US, $100 bill is the maximum. So they've never had an issue of having a $1,000 bill or a $2,000 bill, which they have to, make them illegal currency and then suffer the fates. So I think that it's just that they're unsure about this whole cash economy, how it's reacting, what's the impact. I would not put any credibility issue behind this story.
Mr. Subramaniam, you said that it is unclear. There's uncertainty on what is going to be the exact impact of demonetization. To your mind, what is it going to be, the impact? How long is it going to take for everything to be back as normal? Is it going to be 3 months? Is it going to be 6 months? For how long will growth also be under pressure? And how will mutual funds readjust to this new reality?
Okay, two things here. One is, I think it will last for 2 quarters at least, the impact of demonetization, because of the currency coming into the banking system and the whole uncertainty about what to do. So it's going to, at least 2 quarters is going to be the impact in a sense. So if you're then looking at it, it's both these quarters in the new financial year in 2017, new year, and probably only the third quarter we will see some kind of a revival happening. As far as mutual funds are concerned, there are two things here. One, mutual funds, I think, have something like a 15% share of the total individual bank deposits. To the extent that bank deposits have seen a rise, I think the mutual fund industry will also see its share of flows coming up because of demonetization, because of the fact that as long as money is in the cash system, people are not bothered about returns. But once it's moved into a bank account and a deposit, then the focus shifts to returns. And mutual funds get money on the basis of arguably better inflation-beating returns than the broad banking system of savings account, current accounts. So I think that this is a positive for the mutual fund industry in terms of the flows which will come in. So we remain bullish on that front. So if you take like somewhere between 12 to 14 lakh crores is what they're talking about as the money that has come into the banking system, and you take a 15% share, you're going to see about 1 lakh or 1.5 lakh crores over a period of time available to the mutual fund industry from the demonetization impact.
What I meant, Mr. Subramaniam, was how will portfolio allocation change? Will it really change if the uncertainty is going to, or the impact is going to last for about 6 months? Would you go underweight on particular sectors and overweight on others?
See, there's going to be changes in portfolio, but I would not attribute the cost to demonetization as much as to the fact that the Trump effect and the fact that the US is going to move from a monetary stimulus to a fiscal stimulus will impact global cyclicals, like energy, metals. So you're already seeing the revival in those sectors. So what mutual funds will be doing, and especially our fund will be doing, is a tactical shift to global cyclicals. So now you might look at that portfolio and you attribute it to demonetization. No, I wouldn't call that, because for us, demonetization is a short-term 2-quarter impact. We don't take 2-quarter impact to take assessment on portfolios. We build portfolios for 3 to 5 years of wealth creation. So in fact, on those sectors where we feel consumption will rebound, see, the point is like this, because we feel this is only a consumption postponement. What we feel is that in the quarters when this starts coming back, it will come back double strongly, because all this pent-up demand is going to get released. So actually the second half of 2017, you'll see super strong growth in consumption. So to the extent that valuations today of consumption-related sectors gets corrected, we would actually look at it as a buy opportunity, because our views are always a 3 to 5 year view.
Right, but still, a lot of businesses would change, a lot of opportunities would come up, a lot of businesses, the way they were doing, probably something like a Titan, something like a Havells, businesses, Asian Paints or the paint sector, we can see some changes over there. So that is something which you will monitor, and right now you're not taking a big call?
Yes, because see, I think that businesses, all the businesses that you mentioned have always had a cash component and a regular banking component to their demand. It's not that they have been selling so far in cash and they don't know how to deal with the new scenario. So I don't think any business in India which is in the retail sector has a cash component and this component, and I think handling the new scenario is not going to be that big a challenge. Yes, business model in terms of how they do digital payments, enabling credit card payments, enabling EMIs for people to buy. These are all methodologies which will go increasingly into usage. But I would expect the corporates like these to be smart enough to be quick on the uptake and implement these.
Right. What do you do, with, say a digital business now? Earlier also they were growing, but with this, you will have the digital payment methods being faster. Digital business is growing much faster than what they were, at least the ones which are related to payment. Would you be a buyer into these names? Some of them have done well. Some of them are very small names which you would have not even looked at otherwise.
No, obviously this is a new opportunity. Exploring that is something definitely we will look at, especially since over a 3 to 5 year period, these businesses are definitely, leave demonetization alone. The government itself, apart from demonetization, has done a huge set of actions, right from direct benefit transfers or subsidies to the Jan Dhan Yojana accounts, to allowing payment banks, allowing microfinance institutions to explode, and the fact that government's own payments are going to become increasingly digital. So clearly the path for a digitalization of the economy is on a longer term path. So naturally, in picking a portfolio, that will be a key component for us in looking at companies, because obviously those guys are going to have an unreasonably high market share when the digital move happens.
Right. And also with digitization, a lot of businesses would change the way they operate. In some sectors, you may actually see a lot of unorganized sectors just going away. For example, in paints, there is a large unorganized sector. In fans, there is a large unorganized sector. You think that all those businesses may not be competitive, and it may lead to a big opportunity in some of the consumer durable sector?
Absolutely. If you see, the overall listed space is going to gain hugely from this demonetization. You got the nail on the target, because these cash-based businesses, how far they transform, whereas the existing organized players would easily be able to move in and capture that demand. So yes, in all those sectors that you mentioned, the existing listed organized sector would benefit. Second is, you got to look at the value chain also, right? In the extreme end of the value chain of all these companies, earlier they were paying wages to casual labor in cash. Now even that's going to be all either digital to direct credit to bank accounts or through checks. So I think to that extent, the taxation income of the government and the GST's effectiveness is going to improve because of the shrinking of the unorganized sector and the expansion of the organized sector.
Right. What do you do, with the sort of, benefits that may come in with GST as well? Or in the near term, you believe that GST would be disruptive, and that's why you would wait for both these developments to do? Again, sectors that we just spoke about, whether it's paints, whether it's high-end consumer durable, whether it's need-based consumption that we're talking about, all of them will be impacted by, GST also in a big way.
Yeah, but see, anything that's going to be impacted by the GST, right, is something that we're already buying, because we don't need to wait for it. See, GST is a matter of when and not if, right? Yes, the recent events of demonetization may delay the implementation by a quarter or so, right? It might get postponed to July. But GST is going to happen, and I think those industries which are GST positive are something we've been already acquiring in our portfolio and will continue to do so.
Right. One sector which the market was just liking in the last 6 months or after Feb or the budget was the NBFC space. Any NBFC were linked to rural, linked to probably growth into the retail space was doing well, and we've seen huge correction over there. Some of them have cash components the way they take because the ticket size is very small. Do you think 2-3 months down the line, once we have the issues solved, NBFC again would become one of the big buy sectors, at least selectively?
Absolutely. Because if you look at the overall scenario and you take demonetization, which has affected that part of their business, but apart from that, the rural consumption story, right? That's why I keep harping on the word that it's a postponement and not a destruction of consumption. Because what are the factors which contributed, right? One is government spend on roads and railways, which has created non-farm sector employment. Second is NREGA disbursements by the government, which has been happening largely through the banking system. Third is the pay commission release, which started from August onwards. And the fourth was the monsoon impact, right? So monsoon impact to agriculture, that's a largely cash-based business. But if you look at the other three, right, they are essentially through the banking channel. And what we'll see is that NBFCs are, with these more money moving into the banking channel, are creating a track record for NBFCs to increase their lending books significantly. So what you said is bang on, that when consumption comes back, it will come back double strong, because even earlier a person who was going to pay 100% cash to buy a Mercedes-Benz is probably going to be today marketed by a set of bankers going and telling him, take a loan from us to buy this product.
Right. So once there is a further correction, the valuations would become attractive. Even now, something like a Bajaj Finance, which, just everybody wanted to buy, valuations were probably at the highest in the sector. Another further 5-7% correction in some of the leading names, and you would be interested to look at them?
Absolutely.
Right.
No doubt about that.
Right. How do you, rate the financial sector? Of course, you're a part of mutual fund. You've looked at this industry for a while. Earlier, you were talking about 1.5 lakh crore, which will be surplus for the industry. Do you think financials as a sector, and I'm not talking about banks and NBFC as a whole, maybe broking business, maybe companies with great mutual fund track records, all of them will also become much bigger in the next few years?
Absolutely. For the simple reason that, you mentioned this, but Take consumer finance, take insurance. Just in these two, India is at the bottom of the world pie in terms of per capita penetration. Okay, so the scope there is huge for these to grow. The second thing is that financial sector is both a driver and a beneficiary of the whole thing, right? So if you see banks, insurance companies, asset management companies, payment banks, the number of players. The other thing about the finance sector which you should remember compared to any product in the manufacturing sector is the scalability of the business. I think, if you take a company which makes motorcycles, right? He can't, if you say 10 times the capacity can he add in the next 5 years, you'll say no. Right? But if you look at a bank, can the bank increase its business 10 times? Given the penetration levels, that's not a thing. And you look at the last 10 years, the kind of scalability, both in terms of asset sizes as well as in terms of market prices, that's been happening in the banking and financial service sector. I would say that, actually speaking, India's story is the financial services story. Right? If you want a proxy for India growth, you need to look no further than the overall broader financial services space, not just only banks.
Right. Sir, thank you so much for taking out time for us. Always a pleasure.